Good afternoon, everybody, and thanks for joining us for the JS Mindset Weekly Call. My name's Denny. Today is Saturday, November 9th, 2019, and on the call today are the boys, Jim Sinclair, Bill Holter, and Dave. I'm fairly confident that 99% of the listeners to this weekly podcast are holders of precious metals, gold mining stocks, as well as other hard assets. And there are probably a lot of questions out there about the price action this last week in the metal markets. It wasn't a lot of fun to watch, and we'll be talking about that a little later in the hour. We also saw the stock market at new highs this week, and the longest expansion in U.S. history continues on as if it's an unstoppable beast and has nowhere to go but up. And even to the casual observer, we are watching an economic drama of sorts as world bankers realize they're on the last leg and they're manipulating markets for their own purposes to set up for whatever the next economic cycle might be. So here we are again on Saturday afternoon with the opportunity to listen to the boys and their unique and individual perspectives of both economic, political, and world events. As always, in the course of our conversation today, remember we are not giving investment advice. We're just trying to give you another perspective of the economic world to add to your own perspective, just so you can be prepared for whatever might be coming down the trail. As always, thanks for investing to the premium side of jsmindset.com. There's always plenty of new postings going on there, including Bill's writing and things of interest from Jim, Dave, and Bill that are linked to from their readings during the week. Bill, I want to talk to you today about the sheer volume in the gold trading on COMEX. If I heard you correctly yesterday in our conversation, you said that there are 300,000 open contracts, which amounts to 30 million ounces of gold. Bill, if my math is correct, that's nearly 1,000 tons of gold. Can you help us put this in perspective and give us your thoughts about what's going on?
Well, there's actually, it's the amount, I think your math is wrong. We actually crossed 700,000 contracts by the close on Thursday of open interest. That's 70 million ounces.
So that's that's over 2,000 tons of gold.
Yes.
Lord.
Yeah, well, global production is, call it 80 million ounces. That's roughly, 2,600, 2,700 metric tons. In any case, let's break down open interest increasing or decreasing. Typically, in a normal market, and this is anything but a normal market, in a normal market, as buyers come in, the amount of open interest expands, increases, the price rises. As the owners begin to sell, they sell their contracts to close the trade. And then the open interest declines, and so does price. What we see in the gold market is that on these gold days that gold gets smashed, the amount of open interest increases, which means the initiation of the trade is a sale. It's not a sale to close the contract. It's a sale to open the contract. So what they're doing is they're using the COMEX, a derivative, to wag the tail to wag the dog. The dog is the physical market. Interesting on. Well, let's also add in the exchange for physicals. What's happened with that this year? There's been roughly 250 million ounces. So now you're talking big numbers. You're talking 3 years worth of annual production. You're talking over 7,000 metric tons have been. They stood for delivery, and they get sent to London to be delivered. And then all of a sudden, basically, they vanish because we can't tell whether they're delivered on, how they're settled. You can't. It's obscurity. So the point being, the whole thing is a fraud. I mean, this is not. price is not being made by cash buyers and cash sellers. Price is being made in these futures markets, which are fraudulent, and we know that they're fraudulent because there's absolutely no way to deliver 7,000 metric tons of gold in a year's time. I mean, it's just not. The largest holder in the world supposedly is the U.S., and we have 8,300 tons. So, I mean, that's the nuts and bolts of the COMEX and open interest in EFPs.
Well, that's a huge statement, Bill. I want to congratulate you on the simplicity of something so complex that our listeners should well understand now what the open interest means.
Well, and Jim, the article that I wrote, I think it was out Wednesday or Thursday.
Yeah.
The point I was trying to make at the very, very end, and you might want to go back and reread that article.
Okay.
At the very end, what I was saying is, people can have $1 million or $10 million on a statement with a bank, with a broker, with an insurance company, and right now it feels good. But when when the whole game comes down, what do they really have? And people who own gold or own mining shares right now may not feel good because the price again got whacked this week. But when the game ends, those are the people who are going to have all the marbles. You don't feel wealthy right now, but you are wealthy. And the people who feel wealthy truly are not wealthy.
Bill, if you could trust FASB to be the gatekeeper of auditing and accounting, maybe you could find some reason for a person feeling good. But when that body that's supposed to protect us to statements of truth allow junk derivatives to be valued as full value, called value to maturity, those numbers mean nothing. Those numbers on that statement, you don't have that. I don't have that. You could have $1 billion. You don't have it. What you have is a piece of paper with something written on it, but it isn't there.
They do have it, Jim. Right now, they do have it. If they were able to cash out right now,
oh yeah, individually, yeah.
As of right now, it would spend. But the point I was trying to make is once we go through reset number 1, reset number 2, and everything, the smoke clears and everything settles out, there's not going to be anything to spend, and what you have are in dollars, and they won't spend.
Well, I think it makes people feel good. The point I just added there is if 20% of the people with those rather large statements decided tomorrow they want it, it's not there.
They can't have it, right?
Yeah, they can't have it. Makes you feel great. I'll take one of those. No problem at all. Send it right in.
Jim, let's push that a little. Let's push this a level farther. I've heard you and Bill both say that the COMEX is going to continue to get away with flooding the market, such as what it did this week with sell orders, until somebody stands for delivery. However, and this is the big question, why would anybody insist on delivery if they know it's going to crash the system and drive us into a reset? That's like real catch-22. Why would anybody do that?
The Huns had no intention of doing that, but when the COMEX rumored that they were in fact about to take delivery due to Bunker screwing up the paperwork, you saw what happened. So nobody wants to break the playing board. Okay, the Huns had no intention ever to break the playing board, but debt, as Bill has told us, and he's exactly right, will break the playing board. What's going on now with all of this demand for short-term money? Okay, I mean, $62 billion in a day last week. Why? All right, what in the world is taking place that's making this happen? So it's going to get crushed. But nobody's going to go out to break the playing board. That basically answers your question.
Well, it sort of does, except for the fact that we know that somebody might stand for delivery, whether it's China or whoever it might be.
Denny, let me address that.
Pardon me?
let me address that.
Yeah, here's the point I'm making, Bill. I don't think anybody's going to try to stand for delivery because they know it'll screw everything up. Am I missing it?
Well, you're correct. It would have to be it would have to be an investor or a large investor with bad intentions. And what I wanted to add was, 3 or 4 weeks ago, the Shanghai Exchange is now, they've begun with contracts that are they settle in yuan, and some in a manner linked to COMEX, and people have asked, what's the real reason behind that? And my belief is Shanghai, and I don't think that they're ready to do it from a logistics standpoint. Maybe they are, maybe they're not, but I think it'll take some more time. I think Shanghai is the tail that's going to wag the COMEX dog, and Shanghai is going to end up pricing gold via arbitrage. In other words, they're going to do what they want to do with their own market, and then there will be arbitrage between COMEX and Shanghai, and that's when you'll have physical deliveries that'll come into the mix with the arbitrage.
Hey, might I add that for the listeners, arbitrage is, by true definition, real arbitrage is the simultaneous purchase and sale of a similar item in different areas at the same time.
With different prices to make a profit.
Yeah, to make a profit, and just the definition for our listeners.
David, I heard something last week that made me think. I heard a fellow say that he didn't think that they'd ever seize a citizen's gold because they could never prove a citizen had gold. And he made his point of saying it's ridiculous to scare people into believing it might be seized by the government as a last resort. But he said that people might be stupid enough to be patriotically tricked into selling their gold to the government. Dave, what do you think about the scenarios of confiscation of gold by the United States government or a request for it to be turned in? Have you run that trap?
So few people own it. I just see it as a non-event. I mean, look around. How many people really own it? Again, for them to confiscate it, it would be easy. Oh. They could just create a law, just like they're going to with Bitcoin. Bitcoin is obviously not going to survive the digital currency wars because as China sets up their own and the central banks set up their own, Bitcoin, in my opinion, will eventually be pushed out. As far as will they come and physically confiscate gold, I could see them making it illegal to transact it. I could see them coming up with a giant windfall tax on anybody who owns it. And again, it's hard to make predictions as to how things are going to go because there's so many unknowns. Who would have made the prediction 15 years ago that there'd be $17 trillion in negative debt? So I'm not into it's hard to make predictions. If you really want to cover yourself, you have to look at all the options and try and play a scenario for each one of them. And, personally, I don't like leaving all my eggs in one basket, so no, I would not leave it all here. I would definitely spread it around because there's no telling what's going to happen. So, from that standpoint, we have to look at every day gold's manipulated. It's being manipulated by somebody, something. It's evident. I mean, Bill could sit here and explain to you what's being done. Jim could. There's 100 commentators on the Internet who will tell you we know this is happening. Data can prove it's happening. The fact that it's not stopped means it's an official government policy. J.P. Morgan is a criminal enterprise. That's not a conspiracy theory. That's fact. We know for a fact that J.P. Morgan absorbed Bear Stearns' short position in the metals market. It's never talked about in the press. It's being covered up. Our president never talks about it. The Republicans never talk about it. The Democrats never talk about it. We're all distracted by ridiculous nonsense in the news all day long, and it makes it impossible to try and predict what's going to happen down the road because, again, we're dealing with an enterprise that's a criminal enterprise at its heart. We know it's a criminal enterprise. We know they're manipulating the price of metals. It's been going on for the 20-something years that I've been involved in the metals market. And Bill, would you agree?
Everything, David.
Right. There's my point.
Everything 24/7 all over the world.
Correct. And that's what I wrote you guys in an email the other day. 24/7. Every single market is rigged. So what does that tell you about our leaders? They obviously are our financial enemies. I mean, when the president comes out on Monday morning and tweets, oh, everybody's going to get rich again because I'm going to pump the stock market up. What is that? That's obscene. That would seem to be against the law because wouldn't the banks know he's going to come out and make that statement and front run it? Oh, and by the way, let me throw a statement in here about China and we're going to have a great deal. Get another 300 points out of the market. Then the next day, oh, there's no deal. And the next day, well, there's going to be a partial deal. Then the next day, there's not a deal. I mean, I've got the newspaper headlines lined up. Deal, no deal, deal, no deal. Before the next day's paper was out on Friday, Thursday, the New York Times said we had a deal. Everything's manipulated. Don't rule out the government could do whatever they want because I've watched them for 20 years do whatever they want, all parties included, several different presidents through all the different administrations. Keep your cards close to your vest, people, is what I would tell you.
Hey, Dave, there's going to be people that say, well, why can't they just do this for another 10 years, 20 years, 50 years, forever and ever? And the reason being, on the one side, on the paper side, the debt that's outstanding cannot be paid. The real economy cannot generate enough cash flow to pay the interest. On the physical side, let's look at gold, let's look at silver. The real gold, the real silver does not exist to be delivered. So this is not something that can go on forever and ever, and they're in the end game right now, and that's why you're seeing bankers worldwide doing stupid things.
Bill, let's talk about the Fed. Oh, go ahead, David. I'm sorry.
No. Well, I don't know that you guys had a chance to even look at it, but, Wall Street today had a couple great stories that someone had passed to me that I had already read, and I had passed them to you guys, because a lot of this could have, do we know what the Fed's taking in as collateral? Do we have any idea? They're throwing out $60 to $100 billion a day. We have no idea what's going on. None. Zero. And the press isn't even covering it.
Well, they do show what their balance sheet holds.
Yeah.
Now, is it believable or not?
In a general sense, yeah, but not in a specific sense.
Well, let's talk about the Fed, Bill. The fairy godmothers at the Fed appear to me to be absolutely shell-shocked. They're pledging to control inflation. They're pledging to aid business growth. They're pledging to deal with large unemployment. And they're pledging to provide an undercarriage to the bond market. Is that even possible anymore, Bill? How can the Federal Reserve do that?
Well, I mean, it's what they're saying is it's financial socialism. Everything for everyone is free, basically. We're in control of everything. And
financial
because if they pull one lever, they have to push another lever. And what happens is they're pushing and pulling levers against themselves.
What I see when you say financial socialism, that means privatizing profits and then socializing the losses, sort of like what happened at, okay. Is that what you call
socialism? All over again, but on a far grander scale. And it's going to have to be on a far grander scale because the system is far larger today than it was then. And the amount of spending is far greater.
Bill, did you notice Bloomberg speculates somewhat that he might run for president? And
he filed papers yesterday.
Bloomberg puts out Bloomberg, the company, puts out that their key index indicates a major collapse. Kind of interesting.
Yeah, it is interesting.
I wonder which one made him think about running for president. No,
I wonder
Bloomberg
who can.
key index.
You're not saying I've got my Dave hat on now, and I'm cynical, thinking that Bloomberg put that out to give Bloomberg's organization put that out to sort of set up a nice sandy beach there for Bloomberg to go out and announce his presidency against bad news.
Take your choice. Okay,
yeah.
One way or the other. The same thing, I think.
Jim, you often talk about a reset in the financial markets. In fact, you always talk about two resets. I get the feeling that the banks know it's coming, and they're gathering up real estates like gold, or real assets like gold, or liens on real assets like land, buildings, factories, anything of real value that just doesn't represent paper. They're taking it in on liens. So, Jim, if we just watch what the banks are doing, we might just really see what's in store for us. And it doesn't look pretty because they seem to be building their balance sheets, including their lien encumbrances or the pledged assets, around hard assets.
It'd be real interesting if we could see what the boys that run the banks are doing for their own accounts. The acquisition of physical has been going on for a significant. It's going on for generations. As has the issuance of counterfeit gold and silver. And as Bill said, in answer to what the listeners clearly are wondering about, no, it can't go on forever because there's a thing called economic law, believe it or not. Those Austrians had a good idea. It comes a point when that type of action results in things like yield curves going in the wrong direction, and maybe what's going on that everybody's rushing to get overnight money. And the system called business just doesn't work. The system of expanding business doesn't work. And the system of cannot facilitate, cannot even make it through any significant or modest downturn in whatever the flavor of the day is about what runs the economy, consumers, etc. So, yeah, it's coming to an end, okay? And it's coming to an end for exactly what Bill and Dave have been talking about. And you can play the game, and you can rig the game for a very long time. But as Dave said, he's watched it being rigged for a very long time. And there comes an end, and the end comes when you see the guys when you see the supposed rule makers actually getting a bit silly, doing things that are so out of place, such as tweeting about a great economy when I'm afraid it isn't great. Okay, when the world around us is coming down hard. So the time isn't near, the time is here. And it's already happened. And now you see the camo being put on to a degree of infinity. And that's what Bill was talking about when he told us what the open interest was on the COMEX.
David?
Hey, Denny, one other quick thing, as long as you brought, or I think it was Jim brought up Bloomberg. Why would Bloomberg run for president? People are saying, well, because there's no Democrats that can beat Trump. I look at it as, what happened to Russia, or not Russia, what happened to the Soviet Union after they collapsed? They were picked apart by vultures, and they were allowed to by Yeltsin. And when we collapse, my thought process is somebody like Bloomberg would love to be the president at the time to allow the vultures to get as much meat as they can. It's just a thought.
Right, but I would venture to that. The vultures have been picking at our bones for years.
Yes, no doubt about it.
All they have left is debt. They don't have anything. They're already up the creek. They don't know they're up the creek. They think they're up like, the paradise. I don't know what they think. But as you said, Jim, this economy, there's been no recovery. The middle class is worse off now than it was 8 years ago, 10 years ago, 15 years ago. And as for this nonsense, there's no inflation. I don't even understand how they could utter that when the average person's health insurance cost in this country for a full family is $20,000+ a year, yet the average wage is $54,000. I mean, those two numbers don't even work.
And just look at real estate, look at stocks, look at bonds, look at where interest rates are. All of that is inflation. All of that is asset inflation.
Cars cost three times as much as my first house, a big fancy car.
That's because you're really old, Jim.
I know. Come on, easy. This is be kind to geezers week.
Your first house was what? Back at the turn of the last century?
I don't know. It was a cave. Okay.
David,
bearskin was cheap.
David, I've been saving this question for you, and I have rewritten it 3 times because I know it's like throwing gasoline on a fire. So let me get it all out, and then you can lay me out. Here we go.
My advice is to pass, Dave.
All right. So I think China gave a bit of a gift to Trump this week when they arrested, convicted, and executed the fentanyl smugglers. Now let me explain. Warren appears to be anti-China to me, and it looks to me that China has reversed their we're going to outlast Trump strategy to literally throwing in for his reelection. And I think the situation is one that I think China sees Warren as a real wild card for them, and they really don't want a pissed off Trump to deal with if he gets reelected, and they think he's going to get reelected. So, Dave, that's why I think the market's picked up on this week, and that might have been part of the fuel to the surge in prices. Thanks for listening. What do you think?
I think it's all great theory, but our markets move for one reason, because the plunge protection team is moving them. And, everything else, non-existent. The percentage chances of Elizabeth Warren being president and being anti-China are non-existent. The headlines that, Wall Street's rattled that Elizabeth Warren may get in. Wall Street's never been rattled. I've been watching this game, Denny, forever. Wall Street never loses. Wall Street was going to be rattled when Donald came in. The Fed and Wall Street were going to get straightened out. How did that work out for the American public? Wait a minute. We're 3 years into his election, and on the night that he got elected, the market was down 1,000 points. Gold was up $100. So maybe he had a come to Jesus moment by the morning and says, I'm going to let them continue to play their game because the market's gone straight up, or it's gone up significantly since then on a no recovery, a bunch of hogwash.
It's up exactly 50%.
Exactly. Gold got hammered for 3 years after that, and in the past year, it's managed to climb back up $200-300. The same shenanigans are going on, and I'm not picking on Trump. Nothing has changed. China will play him like a cheap fiddle. He's outmatched. Jinping doesn't need an election. He doesn't. He's there for life. His best friend is Putin. They are going to nail our coffin shut. To think that we're playing 3G chess is to not have any understanding that our Congress is bought and paid for by lobbyists. They're all criminals. They all belong in jail. And when this gold market rigging will stop is when all the people get on their phone and congressmen and say, I've had enough of this. But again, as long as the man gets up and tells you, I'm going to fatten your 401k, you're going to let him do whatever you want to do. I don't believe in any of this market hooey that it's moving because of this, it's moving because of that. That's all just noise. It's cover. It's cover for what's really going on. The fact that we've moved more troops into Syria and are occupying more of Syria and we're stealing their oil, I mean, what's going on? It's not even covered in the press. Or the fact that we're shipping weapons to Yemen, even though Congress said we're not supposed to be doing that. Denny, I am so negative on what's going on. I can't even put it into words. The public's being played like a bunch of chumps. Left, right, this country, that country. We're toast. I've sent the articles to you guys. We're toast. It's all over. Jinping and Putin have joined forces. We are a has-run country. We've painted ourselves into a corner, and we're living off a pumped-up stock market that when, as Jim said, it lets go, it's all done. We have nothing left. We have no manufacturing. Manufacturing that he was going to bring back is at an all-time low in the country. It's down from when he got into office. People keep saying he needs a chance. Needs a chance, please. The tooth fairy needs a chance. My teeth have been missing for 3 years. There's no money under my pillow. It's all a farce.
Your dentist has it.
Exactly. Yeah. No, all a farce. People are just being led around by their noses, and, that's just how our system works. Nobody wants to see through the truth. I happen to prefer the truth.
I'd say what you just said is we're playing a game of ping pong. We don't play so good.
That'd be a good way to put it. We said 3 years ago this trade war was a lose. It's always been a lose throughout history. This is a lose. China's playing us like a fiddle, and they're not even trying to. We thought we were going to strong-arm them. We thought we were going to strong-arm North Korea. How did that work out? Strong-armed Iran. How did that work out? Remember that place, Venezuela? I mean, we are the gang that can't shoot straight, and we can't stop screwing up. And the public keeps looking at their 401k. Well, the Dow's up. Everything's okay. I'm going back to the mall. Not good news.
Hey, can you get sent to the political re-education camp before the revolution?
Wow. I could run a re-education camp. The problem is no one would want to hear
You
what I
are.
have to say.
You are.
Well, that question went well. Okay. Bill, if one takes a look at Western banking stocks as a whole, the stocks now, they are significantly lower than they were back in 2007 when the subprime banking crisis came along. And what strikes me is that the stock markets are all way, way up since 2007, but the banking stocks are not only not following the general market, they are way, way lower. Now, Bill,
in the coal mine.
Yeah, an astute investor might say, look, if the Fed is rigging the markets to benefit the banks and the bank stocks are not rising, could we just go ahead and call this economic recession on the face of it?
Well, you're saying that other stocks are up. I mean, you're talking about unicorns that have never made a profit. Stocks are higher than they were 3 or 4 years ago, but yet corporate earnings are lower. So it's 100% based on PE multiple expansion. And my initial answer was canary in the coal mine. The reason bank stocks, have not really recovered and have not, made it back to those highs is because of the underlying rot in the credit markets themselves. I mean, look at the flag bearer for the banking system right now. I got to say is Deutsche Bank. I mean, they're the biggest or second biggest counterparty to derivatives, and there were rumors swirling around this past week that they've already actually declared bankruptcy and done it privately.
In 2007, take Deutsche Bank. Their stock in euros was 107.
Right.
In 2019, it's 6. Yeah, or 10, whatever.
Yeah. Okay. You're probably closer. But the point being, they're dead. Whether they declared bankruptcy or didn't, they are on their deathbed. It is a dead bank. And they happen to be counterparty to over $50 trillion worth of derivatives. What central bank, or add all the central banks together, is there any way that the central banks can backstop what Deutsche Bank is on the hook for as a counterparty to $50 trillion in derivatives? No, totally impossible. The entire system goes down.
If you look at BNP Paribas, if you look at Dexia, ING Bank, if you look at Lloyd's, Barclays, J.P. Morgan, Bank of America, all of them are really down hard. Goldman Sachs is down the least. I take it back. J.P. Morgan is up, but Goldman Sachs was at a high of 235, and now it's down like 195, something like that. I just don't see any winners in this, and I think it's a foregone conclusion that we must be in a recession except for the press or the economic babble that we're hearing.
Well, except for the headline numbers, the Dow Jones, the S&P 500. And those are made up, like I just said, of a lot of unicorns, made up of companies that are trading at 30, 50, 100 times earnings. I mean, we're back to .com peak bubble PE ratios with much more financial risk in the system, I would add.
Jim, the current economies of the world depend on a rapid expansion of currencies. But in doing so, they eventually lower the purchasing power of their currencies. It's basic inflation. So if a currency were linked to gold, could I assume that it would also expect a rise in purchasing power? And if they fixed it as at a gold price of, say, $1,500 an ounce, the currency situation would seem to be deflationary if the price of gold rises. Jim, I can't get my arms around the backing of a currency to gold not being deflationary.
Well, you can get lost very easily in semantics, the argumentation of meaning of words.
It's all to do with price.
Yeah. And, deflation and inflation, have, I would say, have a glib textbook definition to most people. But that sets the stage for the reset. In other words, the idea that is you can't set currencies convertibly to gold, or they will in fact be converted. The probability is that gold-producing companies are more apt to get nationalized than gold is to be confiscated, for a very simple reason. There's not enough gold in private hands to make it worthwhile. Yeah, there's plenty in the ground. I shouldn't say that. There's a lot less in the ground than there was before, or someone's forgot to discover it. I'm not particularly sure that I even follow the question you've asked in order to give a proper answer. Maybe if you broke it down into parts and let us all three of us go at it, we can give you an answer. But honestly, I can't.
I think I know what he's asking. Because he used the number $1,500 gold. That's the problem.
$1,500, nothing happens.
Or $50,000 or $1 million an ounce gold, that would be inflationary. But if you use $1,500 an ounce, that's extremely deflationary because there's too much currency outstanding versus the amount of gold there is.
Well, that's why the gold's being manipulated. The first reset will be higher than this, substantially higher, but not. Yeah, but more like 3,000 than 300,000. Okay,
right. Not high enough.
So one of the reasons for holding the price of gold down is so it will look as if they've done something, but they will really have done nothing on the first reset. The second reset will be due to a reemergence of a thing called markets, which simply doesn't exist today. The point is that it's a Nintendo game. It's not a market. Price determination is not by supply and demand. Price determination is by manipulation of indices and specific equities and other items that are considered to have the greatest effect on the mass public or psychology. We're playing a psych ops. We're not playing markets. So at 1,500, yeah, I can see the question, and yes, I would have to say it would mean nothing. And is it inflationary? No more so than it is right now. And would it help currencies increase in their buying power? No more than it will now. The price must be infinitely higher. And you can't tell me that somebody who's smart enough or evil enough or crooked enough to be a trillionaire doesn't know exactly what we're talking about and doesn't intend to get stuck with 1 trillion pieces of worthless paper.
David,
just
go ahead, Dave.
Just jump on that one. See, again, I've heard the Judy Sheldon story so many times about how, she was going to straighten this out and straighten that out. We're going to get back on a gold standard. The only logic behind going back on a gold standard is if you truly have the largest pile. Are we all in agreement on that?
Yes, sir.
Yeah.
Okay, so who, and again, we know ours has not been audited. And let's just assume, let's go with it. Let's just say there is the 8,300, right, tons. Realistically, you don't think China, who has been sitting on reserves, I mean, it just some stew knot in the Chinese government listened to us for the last 3-5 years. You don't think they would have just taken a portion of that and sat down and thought about, well, shouldn't we have the biggest pile of gold? So you have to ask yourself, well, again,
they do have the biggest pile. I mean, they've got over 20,000 metric tons. You can see those shipments entered China.
Okay, so let's just go down that road. So in the end, it's not, whatever happens with the monetization of gold, it's not going to be to our advantage. Because to your earlier question of who would want to blow the market up, are you kidding? We have no friends. I could name 10 countries off the top of my head who would love nothing else but to see us brought to our knees for the flagrant violations of everybody else's rights. We have used finance as a club against everybody on this planet for the last 40, 50 years. Have we not?
Longer than that,
Take the money or we're going to send the military in. Badges? We don't need no stinking badges. Have you seen our Marines? They'll kick your butt. And off go the Marines. I mean, Smedley Butler told you what this was all about. It hasn't changed. It's the same damn game. They just dress up different. But is what Smedley Butler said 100 years ago correct? 75 years ago, whatever the hell he was.
Yeah, absolutely.
Was that a correct statement?
Yep.
So what would make anybody think that it's changed?
My president told me.
I said on Facebook that we don't do that anymore. We don't do that anymore.
No.
So again, basically what you have to understand is pretty much every single thing we've been taught and brought up to believe is a bunch of hokey nonsense because the facts don't cover it on the ground. So we don't have the most gold is probably a good assumption. And then we have to say who holds it.
But, Dave, the people in Washington believe we have gold in the ground.
Wait a second. I'll call Rothschild and check.
It's called deep storage gold. Remember, they reclassified our gold from gold reserves to deep storage gold.
I'm aware of that.
And I fully believe the reason they did that is because they knew that the reserves were gone, and they're just counting anything in the ground in the U.S. as ultimately theirs.
Listen, I'll call my relatives and check on the real number.
Well, and then again, that's why I started the conversation, Danny, about I wouldn't count anything out. And again, my first thoughts when they talked about Bloomberg running, you want to see gun confiscation in this country. And again, you guys know I don't vote, but Bloomberg is the most anti-gun guy.
You don't have any guns either, Dave.
Right. He doesn't have any guns. He's surrounded by security personnel who has guns.
No,
but, I just
take a water pistol.
Right. We've got a crazy situation going here, so I can't rule out anything happening, including saying everything that's in the ground is ours because we need it. It's strategically important for the survival of the United States of America.
Manifest destiny.
All right, I got one more question for each of you. Dave, I'm going to go ahead and start with you since you're wound up like a top.
This show's definitely going to go down in history.
Oh boy.
Yeah.
I worked for 3 hours on that question for Dave about China. Okay, David, here we go. I'd like to get your perspective on a manufacturing economy versus a service economy. All of the new businesses that I see that have anything to do with technology, organizing, delivery, supply chains, and even renting office space. And this is all great, I guess, but from my perspective, it's like a neighborhood garage sale where everybody sells their stuff, takes the money that they sold their stuff, and they go out and they buy their neighbor's stuff, and in the end, they've just exchanged stuff, but it's just junk. That's what I see the service industry as. But I don't see any making of stuff anymore, Dave. Dave, I suppose we can survive as an economy, in a service economy this way, but it'd sure be a heck of a lot better if we had a manufacturing economy. Any thoughts on that, Dave?
Yeah, well, and again, see, it can't happen. The only way manufacturing can come back to the United States is if we gut out our environmental regulations and lower our labor costs to offset the fact that our companies moved the manufacturing to a lower cost place already. We had been trapped. In the service industry, you're correct. Eventually, you run out of people to service because nobody's really doing anything. We're all just servicing each other. We're delivering each other pizza in our Uber cars and our Uber treats, and and then drones are going to bring it, and we'll get rid of the Uber drivers. We're in a declining situation, and as we head into automation and especially AI, bottom line is there's going to be a lot of people who have nothing to do. And if you want to take this all the way through to conclusion, there was a great piece written years ago, whether it's true or not, I have no way of verifying it, and it was about the population of the United States in the future was going to be significantly less than it is now. And you could say that may be the case for the whole world. They don't have a use for us anymore.
Because
it was great when they had a use for us.
There won't be a need for a lot of people.
Hey, there was a 7-foot blue thing following me around Stop and Shop, and all I could think of was you guys, okay? And it had eyes. It was
I'm familiar with those robots. But so again, just back to my point, Eddie, to take this through to its complete end, when they don't need us anymore, and I believe it was Zygmunt Brzezinski who said it, it's much easier to kill 1 million people than feed 1 million people. And the American public is so busy and distracted that they don't even remember that statements like that get made. Think about that.
Yeah.
It's easier to kill 1 million people. And nowadays, you can kill 1 million people so fast, it's not even funny. And to think that they care, yeah. I mean, Jim, exactly. And blame it on somebody else. Because we all know how bad they are. I mean, we've been told forever. We have the handful of bad guys. I forget what general it was who went into the meeting, and we've posted this several times, came out and was told that worse, we're going to have invade 5 countries in the next 5 years. We're still on the list. Unfortunately.
Right, and that was in 1999, David. That was before the Iraq
right
War.
After 9/11, I think it was. But in any case, without looking it up, the point being is I don't think that the public has no idea. They're being lulled to sleep by the daily nonsense that appears on MSM. Our current president is an excellent reality TV host. He has the nation completely distracted, while the important things that we're sitting here talking about are completely we're conspiracy theory kooks who must be living in some la-la land. So, no, we can't bring manufacturing back, Denny. There is not a chance. The only way that's going to happen is if we go to Mad Max society and we have to manufacture our own little killer mobiles. Because it's not practical. It's not practical, which is why it's so important to pay attention, people, as to what's going on. Because this is a dead-end road you're going down at 150 miles an hour with blinders on. And it ends
bad.
Half
the audience passed out.
Right, the driver's passed out drunk. He's on autopilot.
In a Tesla.
Now you scared me.
Take the bullet out of the chamber, Jim. It's going to be all right. All right. Okay. Bill, research is beginning to show that more money has been spent in stock buyback programs and executive compensation than has been spent for research and development.
What a shock.
Yeah, Bill, although that's the stock buybacks have now slowed down, sooner or later this mismanagement has just got to show up on the balance sheet. And it's really going to sting with where the sting will happen when they look at the balance sheets. The rating agencies are going to downgrade bonds, and basically a lower stock price will come. Bill, without research and development, with stock buyback programs, you're really using all the assets of the company to just lower your stock pool, and it seems so irresponsible for management, and it's a never-ending battle then to fight the bond downgrades.
A really simple answer, Denny, is we're not eating. We've already eaten our seed corn. I mean, I don't know a better way to explain it. It's just that's what we've done.
I'm from the Midwest. I understand
gotten fat, and there's not going to be any harvest next year.
You know, the whole compensation packages, when they started basing everything on stock price instead of on profits, they blew it. And yet that's how the executive compensation teams and the audit teams set everything up. And boy, did they go down the wrong path, and we are all going to suffer for that, Bill.
Yeah, and that goes back to the 80s and 90s.
Yes, it does. That was part of my generation.
The biggest champion of that was, what's his name, from GE.
Yeah. The great guru. Everything was driven to stock price, and employee compensation, not just executive compensation, but employee compensation. It was called earn share, if I remember right.
Yep.
And when they started doing that, it sure sounded good, but boy, the disaster, nobody could see far enough ahead that if we base it all on stock price, then we're not really going to be managing the company for profits and for longevity. And it just seemed like we lost our fiduciary responsibility to our companies.
And the question is, what happens when we have the next 2008 and the Fed's not, or central banks are not magically able to reflate?
Reset.
Yeah,
number
exactly.
one.
That's
right.
Exactly.
All right, Jim, last question of the day. This week it was announced that Barrick hiked its dividend up because of the rising gold price. Gold is up over 16% this year, and of course that made sense to me. But it was the rest of the press release that caught my eye. They said that output was going to be flat for the next year and going forward. They saw very little to no growth in mining output. Jim, if they really want to grow, they're going to have to find another source to mine.
The only way they're going to be able to grow gold is by price and acquisition, okay? You said that one word, and the dogs immediately went wild, and I ran into another row.
Well, all I'm saying is if they're going to be flat and they see little to no growth in mining output, they better go on an acquisition tear because they got nothing to mine.
Well, they're going to go on an acquisition tear, but how many gold companies are there if the TSC went from 3,000 down under 500 now? How many majors are there? 10 at the most? One thing you know is the fellow who's running Barrick now, Brestow, is one of the smartest guys around. And what he's announcing is, would you like a copper mine? I'll trade you for gold. He'll trade you a copper mine for a gold mine on the spot. But, nobody running a major is basically Mother Teresa. So that shouldn't be taken by the industry as meaning necessarily good. It should be, hold up your shields, boys. Here they come.
It's going to be an interesting next 3 to 4 months.
It is certainly going to be. But, somehow I get the feeling that when the show should open, now I'm going back in time. Remember, I come from the caveman age. We used to listen to a thing called a radio, and there was a show that had a squeaky door. I think that they didn't copyright that, and we can get the squeaky door to open before we start having our conversation.
Was that the shadow? Only the shadow knows?
Only the shadow knows. By the way, I am the shadow, and I'm not telling you.
Guys, that's all I have for you. Anything else? Well, let's start with you, Dave. Anything you want to throw in here before we say goodbye?
No, but, I'll post an article, a good one. I don't know if you had a chance to read it yet, from Russia Insider about, just how the whole world is evolving. I posted one regarding Marcone, essentially folding his hands and saying, we need to move on with this, Russian thing and, become better trade partners, even if it means NATO might not be what NATO once was. And then Erdogan came out this week and said the reason he needed the S-400 missile system from Russia was so he could withdraw from NATO and protect himself. So, what's taking place here is completely being missed by the mainstream media while they have the whole world distracted. I said a long time ago that at the end of this presidency, whether it's by design or whether it's by just this is how the cards fell, that the United States would look like a bankrupt casino was with its assets sold off, stripped off, and we'd be a second-rate gambling town just like New Jersey became. And again, I'm not blaming our current president for the situation. This situation's been going on for 20, 30 years that I paid attention, and it's been going on much longer than that. I don't think people understand the severity of what a reset is and what it's going to mean for life as they know it. This nonsense every day about the Dow's going up, the Dow's going up, the Dow's going up, that's all this is. It's a distraction. So I'll try and post a couple articles that will give people, I hope, some insight into things that they're probably not seeing in the mainstream news or their normal feed of information. Let's see what next week brings, Danny.
Thanks, David. Jim, how about you? Anything else you want to share?
Yeah, I'm watching my guys packing up after a long Saturday's work cutting wood. I think I'm up to about 15 cords now. Okay? So pretty soon I'm going to get locked up for clear cutting Connecticut. You know, you're talking about truth here. It is not what's behind the squeaky door, and the shadow will tell. Okay? Back to basics, guys. It's going to get a reset, and it's not coming. It's here.
Bill Holter, you're the last one. What you got?
Did you know I knew the real Shadow, Jim?
Really?
Really?
You were too young.
No. I was, I was 25 years old. This would have been back in 85. I joined a golf course, a country club in Connecticut, and their oldest waiter, if you remember the show Me and My Shadow, it was a tap dance routine.
Yeah.
Which would be considered completely racist today, which...
Oh,
whatever.
Sure. How about Al Jolson?
Yeah.
They shoot him.
Yeah, exactly. Yeah. But anyway, I knew him. He was a real good guy, and he was the Shadow. He did it for years and years.
I'll be darned. Well, all right, guys, that's everything we have. To you, the listener, thanks for tuning in. We really do work pretty hard to get this all put together for you. So with all of that, I guess we'll just say goodbye, and we'll talk to you next week.
Have a great weekend, guys.
I'll see you, fellas.